right, I'll try that again. Good morning and welcome to Thompson Hine's weekly coffee chat series. My name is Cassandra Borchers. I'm a partner in our investment management group and also part of the blockchain and cryptocurrency team. I have with me my colleague, Rich DeBari, who is a partner in our business litigation practice group and also part of the blockchain and cryptocurrency team. So welcome, Rich, and thank you for joining me this morning.
Good morning. I've got my coffee.
Perfect. So today we are going to be discussing provisions in the $1.2 trillion bipartisan infrastructure bill that's currently in front of the House. It's already been passed by the Senate, as we will discuss, and how a couple of provisions in this bill are going to impact crypto and the crypto ecosystem. And the two main provisions that we're talking about are an expansion. They're both tax provisions, interestingly enough. So the expansion of the definition of a broker for taxing purposes, and also the crypto tax reporting provisions, which were included in this bill. If we take a step back, as everyone is well aware, I think you've all been watching what's going on in the press and the negotiating around this bill. But it does include funding for roads, bridges, power, high-speed internet, clean drinking water, airports, and a lot of other very interesting projects. However, looping in crypto and digital assets and collecting some tax via these provisions is part of the way that they propose to pay for all of these infrastructure improvements. So real quickly, let's jump right into the expanded definition of broker. And under section 6045C1 of the Internal Revenue Code, the new definition of broker would include any person who, for consideration, is responsible for regularly providing any service effectuating transfers of digital assets on behalf of another person. So that's provision number one. And then the taxing provision also includes, requires information to be reported involving any transactions related to those brokers. And these include AML and KYC type reporting requirements, which would extend to any sort of cryptocurrency transactions as currently written. We think that would also loop in DeFi protocols. And it will be any transactions over $10,000. With the expansion of broker, that once again loops in these people in the cryptocurrency ecosystem. So, Rich, the crypto community is understandably upset about this legislation. I know you've been following it very closely, and maybe you can just bring us up to date on where we're at right now, and whether or not we think any of these provisions will be changing prior to this going for a vote in the House.
So to reset the bid, what's at stake here? We have the infrastructure bill. You mentioned all the different things that they clean drinking waters, bridges, tunnels, and all that stuff. And as you mentioned, in order to pay for that, you're going to need a new source of revenue. And then an untapped source of revenue, as everybody knows, has been crypto. So you have a couple of things here. You have a crackdown on potential misuse and tax evasion or reporting issues. And that's really addressed by this, what was potentially a loophole, the 10,000 or more requirement where banks and other entities would have to report any transaction of $10,000 or more. So now that's been expanded in the crypto bill to more explicitly cover digital asset transactions. So that was probably an inevitability, but as much as reporting requirements and know your customers might be anathema to the crypto community. So that's one bucket. And that one may likely just be covering a loophole that if the infrastructure bill is enacted, will be addressed. Big if. Now to the other side of the equation and the other prong you mentioned, and that's the expansion of the definition of broker, that's going to have a different effect on a wider variety of people. And that is going to mean that any broker, which could mean anyone who did something to facilitate a digital asset transaction, now has to issue a 1099 on behalf of the other person that they transacted with. We'll cover in a second who that may apply to. That's a whole different animal. That's making a lot of individuals in the ecosystem and the blockchain and institutions and anonymous ones now subject to the laws and the rigors of banks and financial services firms and issuing out 1099s. So the stakes are high. We'll cover whether that's even possible. But everyone, after the language was drafted, everyone in the crypto community realized how broad that definition of broker was. They were up in arms and led a grassroots campaign that was pretty incredible in this time frame where really there's not a lot of consensus on anything, and that they pretty much galvanized two sets of bipartisan amendments to try to address this definition of broker before it was put up for a vote in the Senate. Now, recapping where we've been, this is a couple months ago now, but if you recall, there was a lot of chicanery right before the Senate took up the bill, and did they have or did they not have the votes? Ultimately, and we'll go into the different proposed amendments, which may be relevant soon enough, it was decided that touching the bill, proposing any new amendments before it was put up for a Senate vote, even this narrow definition of crypto, and this change to make it more narrow, would have just simply been too much of a risk to send it back to the legislative process. So they decided not to touch it, they being the Senate, even though the crypto community appeared to have done a successful job in educating the Senate of the ramifications of this broad bill. But even though they had them on board, it was simply too hot an issue to touch, and they passed it. It now sits before the House. Your guess is as good as ours on whether it ever passes, but I can make a prediction is that there will not be further tinkering of the infrastructure bill again, and that it will be passed or not as drafted. And we'll talk about what that may mean in light of these broad definitions.
Right, absolutely. And I guess what we're hearing and what they're saying is that will be done or not done by the end of October. So we should know soon enough. So let's talk about, maybe we should talk about that language a little bit, because it does seem entirely unworkable. I think a lot of the reasons, as you alluded to, the crypto community was so up in arms is because they think the legislators don't even understand, how the various components work. The question is whether or not that broad language was intentional, and if they inadvertently caught up some specific, portions of the industry or service providers that weren't really intended to be brought under the umbrella, or that it just wouldn't make sense for. Some of the things I've been reading is the intention was to draft it very broadly so that then perhaps via regulation, the Treasury could kind of whittle that down. And even looking at this language, I'm used to parsing through legislation. There does seem to be a little bit of wiggle room in there. So, what do you think is going on there? Right now it's going to loop in software developers, miners. The DeFi space could potentially just, not develop any further, at least in the US. What is the word as to how Treasury might approach this via the regulations? I think we mentioned earlier some of the proposed changes. So where do we stand on that, and what do you think could happen?
So yeah, I think you're right in recapping that the current state of play, again, we're not political pundits, even though everyone has to play one on TV now to figure out how to manage your business or your assets. But assuming that the infrastructure bill is passed in the House, and again, big assumption, the language as drafted would be in effect, and if signed by President Biden. So a couple of key components there. As drafted, the infrastructure bill and these changes to the IRS code specific to crypto would not be enacted until 2023. They would not go into effect until 2023. It's, last time I checked, October 2021. So we have about 15 months from from passage to actually being in force, these reporting requirements. If anyone's been paying attention in this space, 15 months might as well be 15 eons in terms of the technological developments, in terms of the network effects, and use cases and just the adoption of Bitcoin into the common individual, and most relevantly here to institutions, and finally, the last to figure it all out, the politicians. So as drafted, it doesn't make sense. Anyone who was paying attention can see that. So how can it be fixed? Would it be fixed, for example, by a legislative fix? There were a couple of proposed amendments as we discussed right before the Senate took the vote. One was championed by Senator Portman, and going to your point about whether we understand the technology and whether it was intentionally vague or not. Senator Portman proposed an amendment, which was cast aside eventually, to exclude those involved in the proof of work process from being considered a broker in any way. He even put in parentheses mining. So we put right in there, he was trying to carve out mining. But what he doesn't talk about, or the proposed legislation didn't touch or exclude, was anyone or any entity involved in the proof of stake process. Was he picking winners and losers and the different types of protocols underlying the blockchain and the different cryptocurrencies? Probably not. His staffers or he himself, and I'm not casting aspersions, very well may not have been aware of what proof of stake was, and that mining was not the only way to validate and to build onto the blockchain. As we know, there are validators and staked pools and software developers working in the DeFi space. If Senator Portman's amendment had its way, there'd be a winner and a loser in the crypto space. And that was probably due to just the emerging technology and the lack of education. Senator Loomis's proposal, the Loomis, Wyden, and I'm blanking on the last senator, it was a tripartite proposal, bipartisan, would have addressed both proof of stake and proof of work and those involved in the validation process. In fact, Secretary Yellen has even endorsed this proposed amendment. So maybe Treasury can just, like they did after the PPP, this was the Paycheck Protection Program, which was rolled out hastily. And there were clearly in the legislative language just issues. It just didn't work. There were things not thought of as they drafted this as part of the CARES Act. There were a couple different ways that they tinkered with the program to make it workable, which is really what I think, hopefully, we're trying to do here. There were legislative fixes where just on a clean bill or as part of a must-pass bill like the budget or funding the military, or assuming those are must-pass bills like they once were, to include an amendment to fix the language. That's what they did with the PPP. Or if they didn't even have time for that, Treasury, in interpreting congressional language in the statute, has the ability to morph and to contour the rules in the rulemaking process and interim rules and final rules to actually make a workable framework and implementation of congressional language that doesn't work. The scuttlebutt, unofficially, there was a report in Bloomberg after the Senate took up the bill and when these amendments failed to be enacted, that Treasury understood the unworkable definition and that Treasury would thereafter issue, if it's ever passed, the infrastructure bill, a notice and an interim final rule addressing some of these fixes so that they can be applied and that you don't have a software developer who worked once on a project and was paid in a digital token and helped effectuate a transaction would now have to send a 1099 on behalf of the entity that paid him or her. That just doesn't make sense. That's probably not what was intended by the rule. It was probably meant to cover exchanges and brokers, but we're left to deal with the aftermath of some imprecise drafting.
Yes, well, and for Miner, for example, they are doing proof of transaction, but the participants are anonymous to them. They don't have that information. They can't report that information. Some of the articles I've read have suggested, this was just a way to put pressure upon the people who are getting gains and not paying taxes on them. And you're going to enforce rules on the service providers in order to get to the people who are non-compliant. So it seems like they're might be a different way to do that?
You're right, Cassandra, in that, maybe I'm giving too much credit in that the regulatory framework would be designed to make sense and to tax innovation and to implement know your customer and anti-money laundering processes and require them, but not to legislate out of existence the whole technology, which is what you seem to be getting at.
What could happen? Yes.
Is this a way of saying, do this offshore, you're not welcome in this country, because we know that these requirements are not possible? That could have been the intent of some in drafting that, and we'll see how Treasury and how the administration in implementing these laws would approach that. But from the commentary from the SEC and from Chairman Gensler and others, the regulators are at least saying the right things about wanting to work with the crypto community and those in the space, and wanting to understand and wanting to take some of the archaic frameworks to apply them to this new world and learn more. And hopefully they would like to do so in a way that fits instead of boxes them out and has some of the negative ramifications that you're alluding to, which would essentially be just end a certain industry, or at least send it offshore. Right.
I do think one of the positives to come out of all of this, even with respect to this infrastructure bill, it is bipartisan. Bipartisan groups are working on potential amendments and concerned about the crypto industry. I believe there's even a cross-agency group that has been set up to study and understand, cryptocurrency and all the related parties in the ecosystem. So what you're saying is exactly right. The regulators are at least saying or doing some things in order to educate themselves. And we do have that 15-month buffer if this is approved before it's actually enacted.
My prediction, Cassandra, is that this law, let's assume the infrastructure bill's passed. I can't predict that, but that this law will not be enacted in this way with such a broad definition come 2023, by either legislative fix or by a really radical change, which in enforcement and in the administration, like you alluded to, there may be a new regime for digital assets and cryptocurrencies. We know that the administration is now, like you mentioned, from the DOJ to the CFTC to the SEC, even the National Security Council, are all being tapped to work with one another to understand and to have a cogent cross-agency policy from this administration. This is all new and evolving, and although 15 months is a long time in Washington, excuse me, is not a long time in Washington, it's a long time in the crypto space. So my prediction is there will be changes to this, and if you're an exchange, and if you're neatly fitting in the definition of a broker, start planning now, because you will have a regulatory overlay. You will need to start gathering this know your customer and the specific address and social and the TIN or whoever your counterparty is, and your investors or those you transact regularly with. But if you're a minor or if you're just a software developer, you never know, but my prediction is that there will be some sort of at least specific guidance on what you're supposed to do, because it doesn't make too much sense for you to have to issue a 1099.
Right. Yeah, absolutely. And then I guess maybe the other thing we could, first of all, do we have any questions that we need to get to? Okay, great.
I've not seen any come in thus far.
Perfect. Just as a reminder, if anyone does have any questions, you can put those in via the chat box, and we will try to get to them. So, decentralization is paramount to the DeFi space, the crypto space, and is there any? I just don't see a way that can survive if this broad language applies to it. Any other tidbits or lifelines out there that we might be looking forward to?
Well, you mentioned an interesting concept, and I'm going to go back to enforcement. So let's assume that some definition of broker goes forward, and it's not this broad one, and that's my prediction, right? However, there would be some definition that goes forward that clearly covers some DAO, a decentralized autonomous organization. This is a type of organization. It's a new entity, a new type of entity. It's not quite a partnership. It's not quite an LLC. What it is, it's just an organization that is run autonomously by programming on an algorithm. The governance, of this organization is preordained and built into and designed into the algorithm, such that if you're a part of this DAO and you're a member of this organization and you're a stakeholder, you can submit proposals, and then based on the code and the algorithms, it'll be considered and voted on and whatnot. So what we have here is decentralized and autonomous. You don't have if these work and if these are actually implemented in the purest sense of a DAO, what you don't have is a person or an entity that could be easily subject to the jurisdiction of the United States. You could go through the analysis that we know of if you promote, and it has to go back somewhere to some person or entity that is not anonymized, and then you go from there to see if they touch the jurisdiction of the United States or whatever jurisdictions at play here. But if you have a pure DAO and one that is decentralized and has no authoritative or governing body that is doing anything other than the algorithm, then I wonder how you are going to have enforcement and responses to an IRS inquiry. There's no central place to serve it. There may not be a registered agent in the United States. Who are you sending it to, and who are you expecting compliance from? Again, there will be answers to these questions. How does a DAO have standing to defend itself in a suit, to challenge the IRS? If, again, it's just a decentralized organization and no one there is allowed to say, aha, you know what, we didn't think of this in the algorithm. I'm going to step up and speak on behalf of the DAO. That just, it's antithetical to the organization or the organizational type itself, and something's got to give. And whether that is changing the existing laws to conform to the technology, or the technology having to conform to the existing laws or be driven offshore. This is just one example specific to this tax enforcement regime and issue, but you could see it play out, or you could see how it might play out, or wonder how it might play out in any number of contexts.
Yeah, it's going to be very interesting to watch, to say the least. I often wish I had a crystal ball so I could just see what's coming down the pipeline. So much, of course, has happened in the last, if you think about the last 15 months, so much has happened, not just in the crypto space, but in the world. So it should be very interesting.
I'm sure when we next have coffee and chat about this, it'll be a whole other set of technology and a whole other set of issues, but it's definitely interesting.
Right, and we'll have to come back to this in 15 months if this bill passes, and listen to your predictions again.
Yeah, right. I'm sure they'll be helpful.
No, I'm with you. I think those are spot on. Something certainly has to give, and hopefully it's the legislators are going to work with technology and recognize the impact that has on all of this. Everyone's working on their feet and trying to change as rapidly as the technology changes is definitely not easy.
It seems we're going to have regulation of stable coins. It seems that it's an inevitability. What that looks like, I'm not sure, or none of us are sure. But one potential way that this gets legislated or regulated is the on and off ramps to fiat currency. It's not so neat, but whatever happens in the crypto, exchange of crypto, staying within crypto, may be hard to legislate and regulate. But as soon as you want to touch the US dollar, as soon as you want to convert it to fiat, either on or off, then that is an easy way to tax, an easier way to regulate. But it may not be enough to support some of these bridges and tunnels and pre-K that we're hoping to fund. So again, something's got to give. But that may be a compromise, and it may be a way that the path of least resistance, but and kind of at least a workable regulatory overlay, where you treat a stablecoin institution like a bank, and make them subject to the know your customer laws and all of the requirements, and not just those designing software, validating the transactions, and just trying to innovate to make them have bank reporting requirements. Seems off, but again, we'll see.
But yeah, well, to that point, I've seen different numbers as to how much of an impact some of these proposed amendments would actually have on the tax revenue that would be generated by this bill. And just getting your arms around the size of the ecosystem and who the players are right now, I think is next to impossible to get the totality of that. So I'm curious as to how they even came up with those numbers. But in any event, we shall see. Well, I think this concludes today's chat. We're just about at 11. Our next coffee chat will be next Wednesday, October 27th. And at that time, my colleague Philip Sinning, excuse me, it's a tough one for me to pronounce, will be discussing investment company litigation trends. So those will be for mutual funds and closed-end funds. If you missed any past coffee chat, we encourage you to go back and look at the Thompson Hine YouTube channel where they are all posted. And I would like to thank Rich again for joining us today, and thank all of the other participants for attending today's program. And please, there's a survey that will be coming up after this. If you could provide some feedback, that would be much appreciated. Or if you have any suggestions for a future coffee chat topic you would like to see, just let us know. All right, thank you, Rich.